and welcome to the November Life After High School Graduation series, video series, and now we're calling them podcasts. Why not? I mean, you're watching us, right? And again, remember, everybody, when we talked about creating this Life After High School video series, everybody made the statement that life skills isn't talked about regularly in high schools, and there isn't a class on it. And we even talked about how to get different classes going, but then there was this attitude like we don't know if it would fit into our sports schedules. So not that, I'm not in love with technology, because I'm not. I've claimed that before. But we decided to use the video series as a way to get the message out to everybody. So far, we've done one on taking care of cars, buying cars, the kinds of things that if you invest in your own vehicle, what you have to watch out for, and the electronics of that, all that stuff. We had one of those already. The second one, last month, October, we talked about money. We talked about opening a bank account and getting a credit card and what a credit score means and how important that is in today's world as you try and figure out to get a loan or any of those things. So we got that one. Hopefully you've watched both of them. And I promised you this month, November, we're going to talk about insurances. And don't think that it's not important, because you're wrong. Okay? As you're going, you get a car, guess what? You need insurance. You go and you rent a place and you got a whole bunch of stuff in there, techno stuff, you need renter's insurance. Those kinds of things is what's important. And we have Justin and Cliff here to share information about that. And gentlemen, I'll let you guys introduce yourselves, the company that you represent, and then, I got my questions here. So go ahead, Cliff, you started.
Yeah, good afternoon, everyone. Cliff Miller. I'm with TCA Insurance. I've been in the business for 18 years. Our focus is what we consider property and casualty, so the home, auto, life insurance is part of that. So been in the business a long time. Just happy to be here. We appreciate the invite.
You betcha. No, it's a prime time topic.
It is.
And you can go to any class in any high school, and they're not going to talk about insurance.
Right.
Okay?
Right.
And yet, even before they walk out the graduation door, it's something that needs to be discussed.
Absolutely.
Justin, your story.
So, my name is Justin Hill, and I work with Cliff over at TCA Insurance, and I'm a producer there. I talk to a lot of just everyday people because everyone needs insurance, and so it's honestly a privilege to be able to just explain insurance to people in a way that they've never heard it before, because like you said, it's not something they're teaching in school, in high school. And my approach up until fairly recently, and I'm 35, I just got insurance because I needed it, and I had no idea what it was for. And
Exactly.
and I finally had experienced enough insurance claims that I've realized, like, okay, what does this actually, the way that I kind of it was pitched to me, and once I actually understood it, I was like, oh, it all makes a lot of sense if you understand what is on your policy, what you're buying. And it's
and that's why we're here.
Yep.
Because in the old days, and now, this gray hair might give me away, but I'm not that old, but yes, I am. But in my day, my dad just added me to the insurance. Sure. And this and that and the other thing. And that kind of has faded away, right? It's almost a person by person policy making time.
Yeah, I think the reality is that there's an appropriate time, and I don't want to say that there's a point in your life when you need to get out of your parents, off of your parents' policy. But I think the reality is if you're approaching 18, 19, 20, maybe you're transitioning into an apartment, the faster you can establish your own policy and your own insurance history, the better off you're going to be for the future years to come.
Well, and Cliff, I got to believe insurance follows that same banking thought, you almost need an insurance score.
Absolutely.
You know,
Yes.
people want to know that you're reliable, and as you know, buy other things and invest in and need that insurance coverage, that you are a good
Good risk.
practicing risk. Yeah, you betcha. So it makes a lot of sense, you guys. So if you heard that, you know, as you're getting, you know, closer to that graduation point, or you're already there, you know, that getting your own insurance coverage away from your parents is not a bad thing. It's starting to make that progress. So let's talk about the auto insurance part first. Everybody wants a car. You know, you get your license 16, you want to get your own car. And so how does that all happen, you guys? If they walked in the door and they're maybe 16, 17, what happens that time?
I think one of the best pieces of advice I can give is never let insurance lapse. So one of the major things in the state of Michigan is that all of the insurance companies, for the most part, want what's considered proof of prior. And so if you haven't had coverage or been on your parents' policy for full 6 months, we're going to have to go to what's called a substandard market, and you're going to be paying a premium that's well above what the average buyer or consumer is paying. If you find yourself in that situation, it's not the end of the world, but you're going to have to plan for it. You're going to have to budget for it. And what we do is we actually go buy a policy that meets the Michigan no fault law, and we put you in that policy for 6 full months. After that 6-month time period, what we're going to do is we're going to rewrite you into what's called a standard company, and your rate's going to be substantially reduced. So if you can avoid it, by all means, avoid being uninsured, where you don't have that proof of prior that all the insurance companies in Michigan want to see. If you find yourself in that situation, just be prepared for that, budget for it, and work with an agent that's actually going to sit down and help you get through that process and work with you through that time frame.
So here we are. We're starting, and you have no insurance history yet. You're gonna, at a minimum, 6 months of almost a practice run with an insurance company. And then once you get through that, your rates would go down just by your having insurance experience.
Exactly right.
Okay, all right. And Cliff, and I know it probably depends on the kind of vehicle you buy, you know, the age and whatever. Say they purchase a car that's valued at a couple grand.
Sure.
And it's just the basic no-fault stuff. That 6 month ballpark amount, would you say?
Yeah, I'll let Justin kick.
Yeah, that's fine.
Yeah, so a lot with that, there's a lot of different factors that kind of play into that.
Sure.
A lot of things is your age. You know, when you're younger, you're just
Yep.
historically more of a risk.
Yep.
So insurance companies factor that in there. But if you have, especially if you're 17, 18, 19, and you've got 4 tickets already on your record, insurance companies see that, and when they pull for your insurance to
Surely.
see how insurable you are, those are factors that they put into the rate. So just making sure that you're, as fun as it is to be 16, 17, and you've got that freedom to just make sure you're keeping an eye on that and not racking up tickets, because that has a huge factor in just
So let's say you got no tickets, you're just an infant in the game of insurance life. What would that first 6 months cost?
Yeah, let's go by this. So there's always the opportunity, and I think this is really important. You have to work with a provider that's willing to sit
Okay.
down and explain things to you.
Oh, good.
So if you're
Did you
buying
hear
a
that,
vehicle-
everybody? Sit down, spend some time.
Sure. Ask questions, right?
Okay.
I mean, that's so valid. We get into those scenarios constantly where we have someone that's coming in and doesn't have any idea what they're buying.
Sure.
It's fun when you have that aha moment and
Yep.
they understand it. You know, to Justin's point earlier, it's all about understanding what you're buying. And I think, you know, I look at it from like good, better, best, right? So like if you have a vehicle that you have to carry full coverage on, you know, you need coverage if you hit a deer.
Yep.
You have
You
it
betcha.
financed, so the financing company wants collision coverage on it. You're going to be paying substantially more than if you buy a vehicle that's worth a couple $1,000s, and you're getting into a policy that's meeting the criteria for you to be legal to drive down the road. You're maybe going from $250 to $300 a month down to $150 a month.
Okay. So that's a starting ballpark, you guys, you know, when you're thinking about money. But if the vehicle you got has higher value and more full coverage, and yes, in northern Michigan, deer hunting and all those good things, are going to cause a couple deer accidents here and there. Talk through it. Make sure you plan to spend some time with the agent that you're going to work with, and make sure you explain your situation so they can offer you the best.
I will say Justin's a pro at hitting deer too, so
Right,
if you
right.
need advice on how to properly hit a deer, he's your man.
Right?
Yeah.
and if anybody says they don't have an experience that in almost every household, they're fibbing.
Yeah.
All right. So that's all I'm going to say about that. So now we're past getting the auto insurance plan going, and there's multiple factors in that. Let's go on to the renter's insurance, gentlemen. Everybody wants to get out of the house. They don't want to stay with mom and dad. I mean, let's just say that. And did I even think about renter's insurance? No. Did I have a cool stereo? In my mind, I did. So the process of getting renter's insurance.
Yeah, so renter's insurance, excuse me, and a lot of times getting renter's insurance, especially when you're kind of fresh into the game,
Yep.
you've got to get your auto. Most companies, they like to, bundle things up. So it gives you a better rate, and a lot of times the renter's insurance pretty much pays for itself because it brings down your auto rate. So a lot of times it's just smart to have on many different levels, but it gives you protection for the property of whatever, especially when you're 18, you're starting to accumulate a few things. You've got, sports equipment, you've got, stereos, you've got computers for school, you have all those things that with the renter's policy, if anything were to happen, if there was a fire in your apartment or in the house that you're renting, that renter's insurance is going to protect you on all the stuff that's inside of the apartment or the home that you're renting. And that's going to basically help prevent that risk of, if something were to happen, you don't have to go, oh shoot,
Yeah.
I have to replace my computer, I have to replace, my snowboard, my skis, my whatever it may be that you have, and you're like, shoot, I can't afford to, spend $4,000 or $5,000. I don't have that. I've got $300 in the bank. So it kind of helps you balance that risk of either if something were to happen, you would get all of those things replaced.
Is there a variable in that kind of property, or I guess it's property insurance, renter's insurance, based on if you're in a secure neighborhood, there's locks on the doors even to let people in? Does any of that happen, you guys, or is it pretty
cut and dry?
Pretty cut and dry.
I mean, the factor that we've seen impact how much money you pay for a renter's policy is directly impacted by the amount of coverage that you take out. So if you have accumulated, let's say you're 21, and you got an apartment, and you've got it furnished, and you've got a job, and you're accumulating things that, adding them all up, are worth $50,000, $60,000, $70,000. Well, if that's the amount of coverage you have on your policy, that's going to be directly impacted, as opposed to if you have $10,000 policy.
Okay.
Reality is you can get into a renter's policy for $150, $200 a year. So you're talking $10 to $20 a month to have a good quality renter's policy.
So you guys don't skip by this part, okay? Because I'm not saying that everybody's house or apartment gets broken into, but the reality is it happens, and whether your roommate leaves the door unlocked, whatever it could be, you got to make sure that you are kind of proactive in how you protect your own stuff, but that the cost of renter's insurance, and chances are on your front end, you're going to have 10 grand worth of stuff or whatever in your, and that value is what's going to generate the price tag for what you pay. When you think, and we've almost used up our 15 minutes, and I've made this promise. Life insurance, gentlemen, we've covered now the auto part, which is the key, or the renter's insurance, which is key, because those are right now life skills thing. What's the thoughts about having your own life insurance policy?
Sure. Want me to take it? Or?
Yeah.
Yeah, I think the first question I always ask when somebody talks about life insurance is, what are you looking to protect?
Okay.
Right? So I think the reality is the need for a life insurance policy for someone in the 18 to 20s range. They have no dependents. You know, there's, maybe a $50,000 death benefit policy to cover funeral expenses.
Okay.
Obviously, the older you get, the more expensive it gets. So it's not something you want to kick the can down the road forever. But really what you're buying life insurance for is for people that could be, left behind. So I think the need continues to grow, just like, as you get more contents, you're going to want a higher limit on your renter's policy. I think it's always something to consider, but the need for life insurance when you're, in your 18 to 20s, if you have no dependents, is certainly less than, when you're in your 30s and you're trying to protect, 3 of your children, for example.
So you guys, you heard it, think about it. I mean, if you're on your own, investing in life insurance isn't a necessary investment right off the get. However, if you have a child and you want to make sure there's some coverage of some sort in there, even at a young age, yes, it happens. You have them young,
Yeah.
and you might want to consider that, and look at the volume and the style of policy that you might want. But for today, gentlemen, we've covered, the prime things that I know the class people have asked me about, car insurance, and trying to have some kind of renter's insurance so they can get out of mom and dad's house and be on their own. We've covered that. For this first show, and we'll probably have you back down the road. Any other life after high school graduation insurance thoughts that we missed? Just a quick bite, you guys, before we go?
Yeah, I would say, I think my experience, my advice would be, when you're looking at getting a car, just think about, okay, I can afford, if you've got $5,000 saved up for a car, you're like, okay, I've got $5,000 in the bank, or maybe I've got like $5,200. You're like, all right, I'm going to spend that $5,000 on a car. I think really, especially when you're first starting out, just make sure that you kind of leave that chunk for insurance, because you'll find yourself running broke on the vehicle, and you're like, oh wait, it's going to cost how much to insure it? Mm-hmm. And then you'll be driving with no insurance, and you're just asking for trouble at that point. And it's definitely something to factor in in your decision making. Maybe even call an agent and say, hey, how much would it cost to insure, a 2015, you name it, whatever vehicle you're interested in. It'd be good to shop around, because depending on the vehicle, there's lots of stats that they use that say, okay, this vehicle is typically, it runs all kinds of data on which vehicles are involved, how expensive they are to fix, and that plays a factor into what the rates are for that vehicle.
And what Justin said, bottom line, is that if you get pulled over, you always get asked for proof of insurance and your driver's license. So have it and budget for it. Cliff, any last
piece of advice I can give, and I know this sounds archaic, but you can shop around online, educate yourself online, but at the end of the day, I would genuinely recommend that you set up an appointment with an insurance agent that's going to go through the policy with you and help you figure out what's important to you. Set up that appointment with them.
There's nothing old school about that. Everybody that sat in my classes, man, we'd rather have a real life class with you than be on this TV show. Oh, okay. I guess we're on the TV show. But, okay, so we've covered insurances, cars, and banking for this first semester. I hope you watch it, rewatch it as you get yourself in that spot and make the appointment for insurance. Listen to what the gentleman had to say and how it's intended to make sure, you may get the right kind of coverage going out the door. Hey, thanks, and we'll see you in January. And I'll surprise you, whoever the next guest will be. Thanks a lot.